I'll quickly introduce our speakers while we wait for other attendees to join. Hello, everyone. I'm Muskan. I'm part of the growth team here at Vymo. Vymo is the sales engagement platform of choice for financial institutions worldwide. We help them improve sales processes, partner relations, as well as customer engagement. We work closely with over 60 plus leading enterprises such as HDFC, Aditya Birla, AIA in Asia, and Kemper, Berkshire Hathaway in the US. Moving along to give you a little bit of context on today's discussion, the topic of today's webinar is AI-powered sales strategies in banking. We will gain insight into AI's transformative force and how it will help revolutionize customer interactions, optimize processes, and create unprecedented growth opportunities for bankers in India. To cover all this, today we have Sanjay Ghosh. Sanjay sir has been the Deputy General Manager for Real Estate Product Development at SBI Bank for the past 4 years, and he's been with SBI Bank for the past 14 years. He is highly experienced in retail banking and focuses on increasing efficiency, accuracy, objectivity, and customer delight. Thank you so much for being here, sir. From Vymo, we have Varun Ravichandran. Varun is the Vice President of Product Marketing and Go-to-Market at Vymo, where he focuses on creating tailored sales productivity solutions for key industries and geographies around the globe. Just before I hand it over to the speakers, I would like to say that if you have any questions, just put it down in the Q&A section and Varun and Sanjay sir will take it up live. And in case you cannot hear or see the speakers properly, just put it down in the chat option and we will fix that for you. All right, Varun, over to you.
Awesome. Thank you so much, Muskan, for that introduction. And thanks a lot, Sanjay sir, for joining us. I mean, I think this is a topic that is top of mind for everybody across industries, the impact of artificial intelligence in sort of various traditional processes and the ways in which, in a very practical and tangible manner, we are seeing some of the effects of AI in the various workflows. I mean, in the banking space is what I really wanted to sort of talk about. And I think you being part of the sort of decision making at one of the largest banks in the world and seeing some of these transformations sort of play out in the early days, I think I'm really looking forward to learning more about you and some of the things that you have tried and some of the things that you are thinking about implementing for a bank like SBI. So thank you for joining again, sir. So I'll just start by asking a more sort of context-setting, broader question. So from your perspective, how do you see the impact of artificial intelligence in the banking industry as a whole? And are we starting to see some of these effects in India? And to what sort of level are you seeing these across functions? You're on mute, sir.
Yeah, good morning. And thank you, Varun. Thank you, Muskan. I'll just first share my experiences how this AI has been useful for a bank like us. See, I will be talking from the perspective of home loans because I am exclusively dealing on the home loans. So as far as the volume is concerned, as you know, we have recently crossed 7 trillion volume of home loan business, and the number of customers are around 50 lakhs. And this volume is increasing per month by around 60,000 numbers and supposedly 10 to 12,000 crores per month. This is the book volume which you are increasing, which is net of repayments and balance transfer, etc., etc. So maintain this large volume, and this large volume also requires very large incremental increases also. So we need to digitize, we need to integrate all these AI processes so that our the sanction process and everything is very seamless, and we can also risk mitigate the large volume of the banks. Going by our book value, even at a 7 trillion book value, we have a delinquency level of less than 0.5%. So this is only possible because we have integrated, we have improved our underwriting processes to a large extent through technology interventions, through AIs, and through other integrations. So that is there. And recently we have changed our entire this operational software from a standalone LOS to a very integrated and state-of-art technology, RLMS, which stand for Retail Loan Management System. So that is that. And during the course of this webinar, I will explain what are the areas where we have integrated and what are the areas where we are planning to integrate more such technological interventions.
Yeah, thank you so much for that, sir. I think you mentioned a few different sort of components of the home loans process itself, where, I mean, you have brought in digitization and wherever applicable AI technologies. So is it possible maybe to go through some components of this? So you also mentioned, for example, that the delinquency rate is remarkably low. I mean, which means starting from the identification of the right customer, profiling them, and then the sharpness of the underwriting process and so on. I'm sure there are various stages in the process. So would you be able to walk us through some of the components of the end-to-end home loan process itself and where you have been sort of bringing in some of these technologies to play?
Right. I will start. For home loans, there are two very important things. One is that their income proof of the proposed borrower, and second is the documents. I mean, the title of the home which we are financing, because that will be eventually be the security for us. Now, these two things require very diligent kind of examination, and if we delay this examination, this will result in a business loss. So we have to do the things diligently, but yet has to be very fast and efficient. Now, coming to this income proof, there are many fraudsters also who thus change this income slip, and without getting into that, you are in no way to know he has changed that income slip. Now, to do this, we use some very AI technologies, like if there is any tampering in their income slip, we check it. We go through their trend of income for the last 10 to 12 months. And
Right.
if we see there is any unusual jump in the income, we do a process valuation of that. Now, similarly, thing goes for the title documents also, because this title document runs into hundreds of pages. Now, if we train our AI in such a manner, if they find anything unusual about these title documents, without going into the hundred of pages, the system will just give us a prompt that these are the places where we need to check in and where we need to do the remedial measures if necessary. So these are the two things which we use extensively to hasten up our processing, yet to maintain the efficiency and the delinquency of the loan.
Makes sense. And so, and the fact that these are part of the digital workflows means that so the turnaround times and the speed at which you can sort of take the decisions will be sort of maintained, while at the same time you can bring in some of these sharper checks and balances, right? So the customer experience of an applicant will not be compromised because of the fact that you're doing additional checks on the income slips and the documents.
Correct.
Right.
Very right.
Yeah. So on the sales process itself, and then I'll come back to some of the other components that you touched upon, but I wanted to sort of dwell a little bit on the sales process, the sales and marketing process, broadly speaking, in banking. And so we can limit the conversation to the home loans so that it becomes a tangible thing of what so you have worked on. But from that perspective, are you seeing the impact of AI in, I mean, various aspects of it, from prospecting, lead scoring, or cross-sell opportunities? Yeah, the entire sales and distribution. So could you talk about the impact on that, sir?
Yes, very pertinent question, Varun. See, a home loan sales has to be done on a focused basis. You cannot go for a sale to all and sundry for home loans. Now, to home loans, we need to focus on the customers who are our going to be a home loan customer. Now, there are various methods how to focus this customer or how to identify this customer. Presently, what we are doing, we are using analytics on our tools, and we are as analytics, for example, a home loan customer who has taken a home loan, but it is more than 10 or 15 years and his income has increased substantially. So there are two or three combination which we take as a prospective home loan borrower. He may be needing for a home. Now, there are young Gen X, Gen Y customers who has got a good income, but we do not find any EMI going to for his home loan. So they are also a good prospective customer. Next, we see there are high-end car loan customers or personal loan customers or customers having a credit card with a good amount of spend or expenditure. They do not have also any EMI on home loans. So we pitch in for these type of customers based on our analytics. Now this is a very small bucket which I say. There are huge buckets like we can use the social media such as Beru scores. We find this Beru scores. We have all the details in that. We can chip in through those also, and certain combination of data. Now, as you know, this we have got the account aggregator also. Through account aggregator, we can get the account statement of a customer of any bank. So that makes the basket or bucket a big one, and then we can choose from them. So there are ample scope of implementation of AI or ML into this identification of the borrowers or the customers.
Great. So I'm just summarizing some of the things and then to just sort of clarify and then go deeper into certain aspects. So I think we are talking now about the identification of customers. There, I mean, for my understanding, it can come from the existing pool of customers who already have a sort of product from, say, a different product of SBI, some other line of business, and so on. And you have information on their profile, on their sort of history, right? Based on that, sort of what you mentioned is that you can run analytics to identify who might be potential for housing finance, right? So that is the existing pool of customers. And for the net new customers who might be new to the bank, that is where alternate channels also like, I mean, campaigns and understanding their sort of profile from social media and so on comes in. So is that correct, or the way I'm thinking about it? I mean, it can be both from the existing base as well as new customers.
Yeah, it is. Yes, it is correct. But then when we get the Beru report, it covers all his borrowings from across all the lenders. So we get a snapshot of that lender plus his credit behavior also. So that helps us a lot. And we put AI into those reports and we extract the customers who want to have or who we think could avail a home loan. So that is one thing we are doing about it. But yes, there are many scopes beyond this also. So that we are exploring.
Got it. So that's the identification of customers bit, and I mean, and a lot more that you're exploring as well to make it even sharper in terms of who the right customers are. So once these sort of prospective customers have been identified, the sort of rest of the sales process, I mean, in terms of even sort of reaching out in the form of the initial campaigns and then following up with them and nurturing them until they start the application process and go through with it. In that follow-up and the sales and relationship management journey, there also, are you seeing scope for digitization and for AI to, I mean, make it sharper and better?
Yes. See, what we do based on the QDE, we call it quick data entry for home loans. we give an in-principle approval to the customer in 10 minutes. Now, within this 10 minutes, we are making all those important searches, all those important due diligences, KYC, fraud reports, and everything we are doing, even PAN verification we are doing. So that is the technology which comes into the action in these 10 minutes. And within this 10 minutes, we try to do all the due diligences which are there. Now, for example, uh, when I say that delinquency of our book is so low.
Right.
Now, the more or less lenders want to rely upon the credit score only. If he has got a credit score of such and such, we think he is a delinquent, he is a non-delinquent customer, and we give loans on a better price also. So that is one thing. But we go few steps ahead of that. We analyze the credit behavior of the prospective borrower. Suppose I think you know the concept of NPA. It when the DPD goes beyond 90 days, then only it is NPA. But if the DPD is within 90 days, it does not go to NPA and does not affect his credit score also. But then we study this DPD of 90 days only if he is regularly defaulting within 90 days.
Right.
So if he is regularly defaulting within 90 days, that means he can be a potential delinquent customer also. So we do study on that also. So these are the few things which we go beyond what is the norms are there. Not only on static norms, if his score is such and such, we give a better pricing. We do a deep dive into other things also. So this is just an example. There are many more examples where we can do our due diligences and improve the processes. But the basic thing, what we said, we have to do it fast, we have to do it efficient, we have to do it in a secured way, and we have to do it in an objective way.
Yes, objective way, and we have to do it in a way that is not sort of coming across as too cumbersome for the applicants and so on. It should be as so behind the scenes and seamless as possible.
Exactly.
I would think. Yeah.
Exactly.
Fascinating. I think we'll come back to sales sort of later, but I know that, I mean, sales or distribution is just one aspect of the broader banking operations where you have AI being impacted. So could you share a little bit about what are the AI-driven strategies that SBI has adopted, say, across the business? Yeah, some insights into other aspects of the operations where you are seeing a tangible impact, and maybe with some examples from your experience. I mean, would love to hear that from you.
Yes. Regarding AI, there has been a misconception that AI has to be implemented for sales and marketing. But AI goes beyond the sales and marketing. Actually, for home loan customer, this is not a one-time or a sale-through customer. They have a relationship with the banks for at least 12 to 15 to and can extend up to 30 years. So this home loan brings along with other businesses also. Once we onboard them as home loan borrowers, we can find avenues for upselling or cross-selling. So that is one way where we can chip in for that. The next is the servicing of the customer. Say home loan customer, for example, they require this interest rate certificate every year for their income tax purposes. If we can seamlessly give, and we are giving that, the home loan customers through whatever channel they require without asking, we give them the interest rate certificate. And when they ask, normally the home loan when they take, they need some money for their interiors and all that. So we give the top-up loan. So that is another example of upselling of our products. Then seeing their profile, we can know if they're middle aged, their children might be needing some education loan or personal loan. So these are the things which we use the AI to come across the identification for other loan purposes. So then there is also the risk management, how the customer is behaving. Actually, what happens if you say a customer has multiple loan accounts and somehow there is a challenge in his cash flow? So what his tendency is that he will keep his home loan as priority number one, because we have that security of his home, and home loan security being an emotional security, they want that to be intact. So we then see the other behavior of the other loans. If he is defaulting in his credit card, or he or she, this credit card, what you call outstanding, if he is going for another credit card option, so the or evergreening this credit card defaults. So
Right.
that gives us a hint that the customer might default, and we take appropriate measures, all that. Then there is see, in pricing also AI can be very, very effective. See, in home loan pricing, we run a very, very thin margin because of this competition which is happening. So now our pricing includes cost of funds, and then the other expenses what we have. But then we have to keep a credit risk premium also, depending on the delinquency of the borrower. So that also we can come across how to do with the pricing. Then we can use the chatbots also for the regular usage.
Right.
Whatever the normal usage are there, we can use the chatbot also. The process automation after sales and marketing, there are multiple processes. So we are going through this process automation, and we are trying for a faceless home loan sanction, where the customer need not come to a brick and mortar branch and do the home loan. It will be a faceless transaction. We are working on that. So there are ample scope where we can do this implementation of AI, and we are doing that in a gradual way.
Oh, this is fascinating for me just to visualize. So we can think of, I think, so multiple aspects of not just, not just identifying the customer and getting them on board and getting the right customer on board, but then servicing them over the course of their lifetime, and identifying cross-sell opportunities, trends, and so on. Two questions following up from this, just that I'm curious about. First is, from a regulatory standpoint, are there things that you need to keep in mind also? Like, for example, now that you're going and sort of analyzing information on a customer across channels, across sort of multiple touch points, where does one draw the line between personal information and so on? I mean, what are the regulatory guidelines that we need to be careful of? Because there'll be people who are listening to this who are also, thinking of implementing it at their own organizations. So what are some of the considerations or the checks and balances from a regulatory standpoint that we need to keep in mind? So that's one question. And the second question that I wanted to understand is from a more practical manner, or from a more project management manner, when you sort of look at your value chain and then find all of these opportunities to sort of bring in digitization and efficiencies. Do you have any guidance to others who might be going through this journey as to how they should be thinking about it in terms of a phased approach? Should they take sort of one sort of aspect of business at a time? Just tips and tricks, based on your experience from a from a deployment and implementation perspective, right? So two questions. I think one is on the regulation and compliance side, and the second is on the actual sort of implementation of the projects and learnings from that. So,
right, I will answer your second question first. So when you are implementing, I will suggest implement in a holistic way. You do not do it in phases. Like phases by mean you do not use marketing only for then you use for processing. You do it in a simultaneous way so that the customer delight is also there. For example, if we onboard a customer for marketing very fast, say within 10 minutes, and then take 7 days for the processing, so that whole good thing will be wiped out. So my suggestion is to implement it, and there is no rocket science implementation. I think these fintech companies like Vymo and all have got very good tailor-made, custom-made solution for all the requirements. The only thing is that whatever our requirement is, that should be actually translated through this software. They should understand our requirement and then it implement and integrate with our system. So that is one thing that my suggestion is to go for the entire process, maybe in a process, maybe in a phased way, but go for the entire process so that a segment of customer feel the customer delight of that. Now, for example, when we started this, I think you know this, So we started our home top-up loan, in a phased manner. And now within a click of button, within 10 seconds, we are crediting the customer's account with the top-up loan. So up to 8 lakh, nothing doing. He just goes to our app and our app on a background do all the due diligence and checkings, and the customer credited with about 8 lakhs if he is eligible for that within seconds. So these are kind of things which we should try to implement it, because this Gen X and Gen Y, they do not have patience. They want just now. So we have to be in line with their whatever the aspirations are there, and we should do that in that way. Coming to your first question, yes, regulatory compliance is very, very important. As you must have seen, RBI has come on very harsh on few of the NBFCs and HFCs a few days ago. But apart from being penalized or something, it is a huge dent on your reputation also. So we have to be very careful, especially in the data handling kind of thing. My suggestion is that whenever we are handling data, we should maintain the complete privacy of the data. And if we are using this data for our purposes, we should have on record uh, customers, what you call, the customers, they should agree to whatever we are doing, and that should be on record. So recently, India is also going on this data regulation. Recently, Parliament has enacted some of the acts. And while we are doing businesses for NRIs also, we face this GDPR Act, which is presently applicable to European Union. It is a very, very stringent act, and we have to take all the customers' agreement into that while using their data. So my suggestion is that you should be very, very careful what purpose you are using the data. The data should not be leaked, and whatever purposes are you using data, you have in record your customer's agreement for that. So that is the thing. Otherwise, there is no rocket science. You have to be innovative and you have to think what are the things you want to do. And the fintechs are already there, and they will just translate your dreams into the truth.
Awesome. Yeah, I think that makes a lot of sense, and solid guidance for people who are thinking about going down this path themselves. So there was one related question I had on the last part on regulations. Just curious as to know your thoughts on cloud versus on-premise as a directional approach, because some of the fintechs and some of the innovative startups in the fintech space, they usually offer some of the services over cloud and so on. So how do you view the thought process on that, sir?
See, cloud is the future. We cannot think without the cloud. But then there are certain regulation. I think each bank have their own ISD policies where they implement it. See, we have also moved our entire database to cloud. We do sometimes go back to physical servers as a regulatory check. But overall, we are also on a cloud, but there is a ISD policy for every bank and a broad ISD policy of RBI also, that the data should reside within the state of India, and that is one thing. and this data leakage policy should be adhered to that. But there is a separate department for us as ISD who takes care of this cloud policy. And we do entertain solution based on clouds also, because it saves a lot of time, energy, and money.
I think that's fantastic, because if bank as large as SBI, who has their sort of deep rooted into India across the board, I mean, is taking leadership in moving to the cloud and taking advantage of the sort of innovations that are happening in the broader space, stitching them together. So that shows that everybody else can also make the best use of the sort of opportunities that are out there.
And our cloud server is named as Meghdut. So entire CBS data is there in that.
Right. And I think all the sort of cloud infrastructures and the fintechs who are providing services on cloud, I think data residency and the other things are also something that they have to take very seriously. So I think there are two takeaways from this. I mean, for people who are in financial services, banks who are trying to incorporate some of the things you spoke about, I mean, it's important that they sort of take into account all the considerations that you gave. But similarly for startups, right, who want to service banks, I think more and more it's important that we understand the regulatory guidelines that are out there, prioritize this as a core aspect of our product roadmaps, so that this should not become an afterthought. Yes, we can have the coolest innovations, but it should come with all the checks and balances that can make a bank like SBI feel comfortable about deploying your services. So, I mean, both sides have to come to the table.
Yes.
I mean, be my sort of.
Actually, from our experience, we find this fintechs come with beautiful solution, but majority of them fail on the ISD side. So that is very important that you whatever the compliances are there, we should adhere to them. Yeah.
Yes, absolutely. Sort of looking forward, what do you think are some of the trends? I mean, we hear a lot, and there's also a lot of talk sort of around the globe, and we're seeing applications of generative AI, where I mean, content is created and source code is being generated by AI. I mean, it's a lot of possibilities in various domains, but from a more tangible and practical manner, what do you see as some of the trends shaping the future of banking? And particularly on the banking, the sales side, I mean, if we can dwell on it for a while, maybe next 2 to 5 years and beyond, I mean, what do you think are some of the things that will come into play?
See, I'll talk on a home loan perspective, as I stated earlier. I'll give you 2-3 very examples to understand how AI is helpful to us.
Yeah.
Now we have come across a fintech who what they do, they simply whatever the litigations are there in the title deed, you see they advertise in papers and all that. So they just capture those advertisements and keep in their database.
Nice.
And whenever we give them the data, they match with the advertisements. If there is any matching, they throw us a prompt. Thus, this title has a litigation. You be careful of that. So it is a beautiful innovation. They have, I think, lakhs and lakhs of advertisement which they pick up from the local newspapers and they put up in the database in a PDF form. And whenever we give them the data, they run through that database. And if there are any matching kind of thing, they throw to us. So this is one way, because as I said, the income and the title are the basic two requirements. Then again, recently we had some frauds in a big city of India in home loans. So we had gone for there. Now, what we do whenever there is a customer which we onboard, we look for the customer from the various fraud repositories which we have. RBI has also one. We have some fintechs also, and we run through them and find if there is anything fraud in that. But then, if the fraud is done by a builder, we do not come across any such cross verifications for that. Now, what happens? A builder does a fraud in a name of XYZ company, then winds up that company and do a ABC company of that. But then what we found, whatever the database we have in our repository, if we go for individual builders PAN number, we can trace that the builder has committed fraud in XYZ company. So that is another thing where we can innovate and where we can think of such things are there. But as I said, there are ample scope. You need to think, you need to innovate, and you need to implement that. There are ample scopes there, and this kind of thing gives as a lender very secured environment, because see our officers who are doing 60,000 per month, 60 to 70,000 per month, their paucity of time also, they cannot do all these checks. So there we have to do this technological interventions and AI and do this kind of thing. And the end state is that what I said, there should be a faceless banking, whatever the products are, be it home loans, because home loan deals with the maximum interaction, face-to-face interaction, where the customer has to come 2, 3, 4, 5 times. They have to deal with the legals, they have to deal with advocates. So we have onboarded all our advocates and legal team into our system, and they are doing digitally all these things. But there also a huge scope. For example, what we found, we do an inspection of the property also, and we capture the geotagging of the property. So if our AI system, what they do, when the report comes from a valuer or a lawyer, they are captured. Geotagging is matched with the properties geotag. And what we found in a multiple number of cases, this inspection was done in the office of the advocate or the what you call the surveyors. So they have actually not gone onto the site of the there, and that they have put some photo and given the geotagging of their office. So these kind of things, we can catch hold of these kind of practices and we can do away with that. So these are some examples where we are putting in use of the AIs and improving our systems.
Fantastic. And also, since I think a lot of banking is also about relationships, and over a period of time, I mean, it's very rarely that a customer will just come for, I mean, one-off sort of product or service, correct? So usually you want to be with them over a period of time and sort of reach out to them with the right touch points. I mean, just a sort of thought that I had to see, I mean, so you spoke about faceless banking and transactions, but one of the benefits of having a sort of relationship person sort of dealing with a relationship, I mean, would be the right sort of touch points at various the relationship sort of related touch points, right? So is it possible for AI to also replicate some of the relationship touch points, life events, birthdays, anniversaries, so looking at their sentiment across their interactions, identifying sentiment, and then providing something related to that? I mean, is there scope for that, or is that too far-fetched to think about? Where you can have relationship context also being provided.
Absolutely not. Banking is about relationship only. So if we can touch these personal events, there can be nothing better than that. We are doing it physically because, see, since we are not using the technology as such, so wherever a good person, a good branch manager are there, they are implementing such kind of thing. But yes, rightly said, if we can implement it through the technology, it can do a lot of improvement, because loyalty of a customer is a huge demand, because unless he is loyal to us, there are poachers sitting every nook and corner who will take away your application. So we have to be very diligent. And what I said, ki home loan is a customer relationship for at least long-term relationship. And we should maintain that relationship, not that once onboarded, we should forget them. We are implementing it, but yes, there is a scope of implementation with technologies also. Yes.
Awesome, awesome. And yeah, so last question from me, sir. So which is, or it's more than a question. So just the opportunity for you to share any practical steps for banks as they think about bringing in AI into sales strategies. I think you mentioned some of them, but any last thoughts on what are some practical tips or steps that they can take to, I mean, make this a successful transition for them based on your experience?
See, we implement many of the things like ring fencing. Means this home loan ecosystem are the balance transfer is very prevalent these days. So we do a ring fencing whenever whatever our high value customers are there, we check out for the interest rate, because there might be a situation where the prevailing interest rate is lower and what interest rate he is paying might be higher. And that is the position where the loan is taken away by other lender. So we do such checks on our entire books time to time, and we then come across to such customer and offer them the better rates.
Okay.
So these are the some things which we do, but as I said, there are many scopes where we can implement AI.
Yeah. And I think if I can summarize one of the things that you said, I mean, in the beginning, it is that think about it holistically. Don't say that, I mean, if there are 5 steps in a sort of customer relationship workflow, I mean, don't make the first step world class and then the rest of the 4 steps are traditional. Then, so there will be a jarring disconnect in the process. But rather, I mean, we can go in phases, but the phases should be holistic phases. So, like a phase 1 where you touch everything, and then phase 2 where you go deeper. So at each point, the customer gets a better and better flow through experience, right, from start to finish. So that is, I think, the main thing that you also mentioned. Yeah.
Correct.
Yeah.
Otherwise, your all good things will go in vain, because you onboard customer very, very fast, but then the entire process took lengthy. So he will not have a delightful experience for that.
And what is also fascinating for me is that, I mean, in the home loan business itself, so much thought is being put into the speed and turnaround time and so on. Because traditionally, I mean, home loans, we are okay to maybe spend some time and go through with the process, as opposed to maybe some other, say, financial products or retail asset types. So, I mean, if this level of sophistication can be brought in the home loan process itself, then I'm sure the other product types, same or more, can be done, right? And even faster expectations can be there.
Yes.
Yeah. Thank you so much for the conversation, sir. I think really good insights. I think so there is a question from the audience, right, Mushkan? So we can take that question and yeah. Okay, yeah. So this is a question. I think somebody is asking it from a very practical perspective, where they are trying to evaluate vendors. So for various aspects of digitization or transformation that you were talking about, are there any tips as a buyer that you have in terms of evaluating one vendor versus the other? Or what are some characteristics or some checklist that you might look for to go with a vendor for any particular aspect of your transformation?
See, what as a business unit, what we look at it, whatever our expectation is, that you can translate to that through the software. But we have a different unit which looks into the other aspects of whatever the ISD and whatever. They have some quadrants also. How do you qualify? But that is an entirely separate department. And for startups, we can go for nomination also, if the whatever you are offering, it is good. But then as a PSU bank, we have to go by the most formal process of selecting the vendor, which is the tendering and all that e-tenders we do.
RFP process.
But that is for a high value transaction. But a transaction which where the startups are there and who are not yet unicorn, we go in for nominations also. If the solution appeals us, we go for nomination, but then they have to qualify for the ISD and other processes.
Got it. And is there a way to foster some of this or to test it out? I mean, in the form of creating like maybe fintech hubs or centers of excellence where some of them come together and build a solution. I mean, in a sort of closed sort of environment or like a sandbox environment. And would something like that be considered by banks to
Yes.
foster innovation? Yeah.
Yes, why not? This can be considered, and I think because separate fintechs have specialization in separate kind of things, and if they integrate amongst themselves, the end product is should be very good. So that can be considered, not an issue.
Perfect. I think there are no more questions at this point. So thank you so much, sir. I think this was not just a good summary of all the possibilities of AI in the sort of banking operations, particularly sales and marketing, but also a very sort of real discussion. I think there are a lot of discussions out there which just put buzzwords. I think the difference that you brought was, I mean, very real discussions about things that you have implemented, specific things that people can sort of consider in terms of enhancing their underwriting process, their risk profiling, and so on. Yeah, so that I think so keeping it real was something that I really sort of valued. So thank you so much, sir, for your time.
Thank you, Varun. Thank you. Pleasure for me also.
Yes.
Thank you, ma'am.
So to everyone who is attending, we will be sending an on-demand video link. A few of you have already asked me. So we will be sending out an on-demand link so you can access that offline and share it with your peers as well. And if you have any questions specifically for Sanjay sir or Varun, you can write to me, Varun or Sanjay sir in the same calendar invite, and we can come back to you with all the answers. Thank you so much, Sanjay sir. This has been a very valuable webinar for us. A lot of people, even in the attendee list, have been asking me questions.